This week in the parish of bourses and market structure, ASIC tightens noose on market monopolist problem child ASX, NYSE 22/5 progress, as LSE is stagnant and Hong Kong is upbeat. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 285. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest's daily subscriber newsletter, the unique guide to the Bourse Business, sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, is it bankrupt the SEC version 1.0? Lots of people jumping on a bandwagon here, including Coinbase. The next step in crypto appears to be, if the SEC stop investigating you, demand damages. Hence, SEC closed investigation into Gemini with no action, and suddenly the Winklevi want their money back, as it were, for their legal recompense. And indeed, there's a similar kind of move afoot by Coinbase and others. A worrying possible proclamation of victimhood, but something we might readily expect from the world of the crypto bros. If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day on Exchange Invest. Alternatively, if you want to follow BitCarnage, a daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. This week in exchanges, it's not a totally done deal, but the SEC is moving with alacrity, hooray, and NYSE are thus closer to being able to launch night session trading. That said, Blue Ocean has a while yet to further emphasize their competitive advantage of being live and in the field in the prime night markets of Southeast Asia. When it comes to NYSE 22/5, the tricky steps are yet to come, and we outline the issues this week in Exchange Invest, the water cooler of the Bourse Business. Subscribe now at exchangeinvest.com. Further south in Southeast Asia, the Oz regulator is talking the talk. Can they now fang their fangs in a suitable fashion to encourage the Australian monopolist ASX to deliver a coherent market structure? And at the same time, there's a headline in the Australia MAGA mindset needed to make ASX great again, which can be compared with the more prosaic ASIC headline advancing Australia's regulatory roadmap for public and private capital markets. As a co-conspirator noted, what a belter of a headline. That was the first one, rather than the second from the regulator, of course. It's not new, however. The Sydney Morning Herald had a story last September headlined, "Why We Need to Make the ASX Great Again." In any case, it's all true. Insofar as the status quo is stuck on a cycle of repeat, fail, Australia deserves better. Will the shareholders push alongside ASIC Chair Longo to deliver a renewed hope Australia is not viewed as a laughingstock of a financial centre due to its highly haphazard and sublimely haughty monopoly market structure? This remains an overdue intervention from ASIC, but is clearly travel in the right direction happening now. Please, start properly baring your teeth at the agents of intransigence, Chairman Longo. Speaking of agents of intransigence, the London Stock Exchange Group boss has challenged the benefits of US listing. Even by the subterranean depths of insight we're used to from out of his depth Dave, this is utter piffle. Oh, what a load of drivel from a person who we should be actually pushing from office forthwith, I say. But the shareholders are still upset they couldn't buy DB1, so they won't be listening to PLYs better than their management track record. As if the management has a track record. LSEG remains a seat of sublime hubris, helping undermine rather than enhancing the London financial centre. The richest irony of all this is, of course, that no stock could benefit more from a US listing than the LSEG, a data company seemingly reluctantly holding some trading market assets which it doesn't really understand. Meanwhile, as Chinese IPO flow to the US looks to be drying up in the age of Trump's second presidency, the winner may yet prove to be the Hong Kong Exchanges Group in Hong Kong. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or if you have time, a positive review will always be welcome wherever you find this podcast. Over in results, well, one of the winners this year was, of course, Hong Kong. They produced revenue over income up 9%, profit up 10% as a whole. That despite the fact that the Chinese equity market was particularly icky over the course of the last year. Compare that to the London Stock Exchange. They managed just about the same sort of operating profit increase, but of course, they tell us that they're absolutely phenomenally incredible data companies. So where's the beef here? I really don't understand. Out of his depth, Dave appeared positively chipper on CNBC after delivering the Paris equivalent of the Hindu rate of growth, which ought to be termed the Reuters rate of growth. Stockholm Syndrome remains the, seems, prevalent thesis over what's going on at the LSEG. There were a lot more results. All of those were to be found in Exchange Invest this week. Those were just highlights. If you want to know everything that's going on in the business of bourses, don't forget, subscribe to exchangeinvest.com. Similarly, that was the case in deals this week. Let's pick out one highlight. At last, after only a decade or more of trying, the PSE closed the acquisition of BAP shares in PDS, and that means that it now holds 78.33% of the equity in PDS, the bond platform. However, it has failed to fully acquire the fixed income trading platform as two bank shareholders are holding out. At least PSE has control, but with significant minority shareholding. Exchange Invest, meanwhile, is proud to have launched a special edition inspired by my visit to ring the closing bell at the New York Stock Exchange, July the 5th, 2024. Patrick L. Young, that's me, bestseller, the original fintech bestseller, Capital Market Revolution, a decade before that word held common currency, fintech I mean, has over 10,000 new words of additional pith, placing the past quarter century in perspective alongside the original text, which has proven remarkably successful through the years. Capital Market Revolution 25th Anniversary Edition is published by Exchange Invest and is now available as an ebook via Amazon Kindle at a ludicrously reasonable price of $9.99, a quarter the price of the original shorter print book a quarter century ago. Don't forget, while you're ordering that from Kindle right now, the Capital Market Revolution Anniversary Edition, 25th Anniversary Edition, I hasten to remind you, then if you meanwhile fancy some financial insights with moving pictures, check out our live stream Tuesdays 5 o'clock London, midday New York time. It's the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. Now online in our great series of those IPO vids was me talking about a new world order. That was actually an extended version of the keynote speech I gave at the AFM conference in Nairobi on February the 14th, which was recorded specially for the studio audience via IPO-VID. Check that out on wherever you can find IPO-VID, which includes Facebook, LinkedIn, and YouTube. Our finance book of the week this week is Left Behind, a New Economics for Neglected Places. A brilliant, captivating tale, the latest in the compendium of insights from our most recent IPO video guest, Sir Paul Collier. This is a wondrous insight into how to help coalescing regions catch up. Over in product news, quite a bit this week, but one highlight, I suppose, in a way, curiously enough, CME Group are launching Solana futures, so once again people want to trade their Solana futures on old-fashioned exchanges rather than the new thing of crypto. And that, of course, came as an announcement ahead of talk that President Trump may be buying a strategic reserve of crypto coins. Nope, we don't understand why either. Technology news this week, the Exchange of Egypt. They are delighted to be collaborating with Nasdaq on their new trading system, while ADX has been stating its delight at the recently upgraded Nasdaq system in Abu Dhabi. Also an interesting structural move from Vienna. Austria's regulatory reporting infrastructure is going to be moving to the cloud with Nasdaq Axiom SL. There was also another hubbub of what looks like bad or biased research complaining about market data. The story behind that was behind our paywall in Exchange Invest because market data costs money, folks, and so does market insight at our level of quality. If you don't believe in that, feel free to stay uninformed, I suppose, is the best advice I can proffer. In Career Path this week, the government's shortlisting candidates for the next SEBI chairman after the last chairman, the first female chairman, resigned, well, at the end of her term, but not exactly in the best of circumstances. While someone who is in the best of circumstances these days is the ascendant Bjorn Sibbern. He's been appointed the new chairman of BNE, and in case anybody missed the memo, Bjorn Sibbern is firmly in charge at the SIX Exchange Group, and the parish is all the better for his leadership of the Swiss exchange and indeed also BME, the Spanish exchange, already. And this is early days as he is confirmed as the chairman of the Spanish market monopolist. That leaves us just at Big World, ladies and gentlemen, and a truly stunning statistic I learned recently from the brilliant geopolitical analyst John Hulsman. The EU amounts to 9% of the world's population and is paying itself 60% of the world's benefits. 50 years ago, Margaret Thatcher became a Conservative Party leader in the UK, precisely realising that sooner or later you run out of other people's money when it comes to government spending. When does the EU reach that end point, I wonder? And on that mysterious and magnificent note, thank you for listening to this Exchange Invest Weekly Podcast number 285. Join us daily via exchangeinvest.com, the water cooler of the bourse business, the exchange of information. Or if you have a new exchange marketplace you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets.
This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.